Boom, we are alive, ladies and gentlemen. The cracks are starting to show, and if you've been paying attention to the markets, Bitcoin broke into the $21,000 region, and the dollar index has dropped back below around 111 points. Even though the Federal Reserve just raised interest rates, the dollar is showing weakness. Now, we've talked about the volatility index in our private group quite a bit, and it kind of represents a basket of options premiums. And normally when the markets go down, the VIX goes up, and when the markets go up, the VIX goes down. Now, it's not exactly risk or volatility, but it's a measure of that volatility through the options premiums that are available on the internet. You can find it out here by doing some research on, this is Investopedia. So just a quick little read here from what is the volatility index. Is a real-time index that represents the market's expectations for the relative strength of near-term price changes of the S&P 500. Now, yesterday, the S&P 500 was red, and the VIX was also red. That is very strange. I've been watching the markets for a bunch of years now, and I have never, not once, no, never seen that happen. So this type of thing to me is one of the early indicators that trust in the ecosystem is starting to break and something is going wrong in the back end. The other thing I think that is a very close relationship to this is actually the US Treasury bills. So the US T-bill, which is basically a bond of sorts, currently the 5-year is offering higher interest rates than the 10 and the 30-year. So imagine in the DeFi world for a second, if you went to a staking platform and they said, look, we're going to give you a higher yield for a shorter time, and the shorter time, this makes no sense. You'd be like, well, wait, why the f would I ever lock my money up for 30 years for less yield? Normally it's, hey, if you lock your money up for a longer time, you get a better yield. It's like this fantastic deal, right? But here you're seeing the opposite thing happen. This is the first signs of the breaking of the trust of the financial system that the people have been using for a long time, kind of right in your face. So for the first time, the volatility index went red when the markets also went red. Makes zero sense. For the first time that I've ever seen, the US Treasury bills on the short term offer a higher yield than they do on the long term. Bitcoin's back around $21,000, and the dollar is at around 111, showing strength after they just increased it, or showing weakness after they just increased the interest rates. This doesn't make any sense. And part of the problem, and I think one of the things that people overestimate, is the dollar's value, or rather currency in general. You know, a good question of like, what is currency, what is money, I think leads you down this pathway to find that humans as a species, for the longest of time, have related money as somewhat of a mimetic. It doesn't really need anything behind it. You know, the gold and silver bugs would make the problem, well, this has been money forever. Now, money is usually closer to that of a commodity. Something like a barrel of oil is closer to money than currency. Currency, the US dollar, the peso, the Costa Rican colone, whatever they meant be, those are used for purchasing power in the intermediate term. The government tells you that they're going to inflate on average around 2% every year. Now in 2020, they blew way past that, which is why you have immediate inflationary effects on the economy, which is what they're trying to drive down. But the problem is you're dealing with a supply issue as well. There's only so much oil. There's only so much gold. So when the commodities that are usually money start to separate from the currency and you just try to print it and there's not enough of it around, you're going to see inflation no matter how much currency supplies there is, because there's more people that want more of that thing. Now, the devastating aspect here, again, is that we have more evidence that the excess mortality rates are riding around 20 to 30% above average. So that's shocking and alarming. It should really worry people, because for some reason now we have more people dying on average than were ever dying throughout the pandemic. Now, you can go do your own research on that. I'm not a doctor, I'm not a scientist. You can come to your own conclusions. I have no idea what might be causing it. But because of this, I feel like we have overestimated the amount of time it might take for the US dollar to break down. There's this saying, the idea that it happens slowly at first, and then quickly, and then all at once. And these signs, these indicators of the breaking down of the US Treasury yields, the dollar, even after they raise interest rates, lends me to believe that we're getting closer and closer to that breakdown. And one of the things I've always said, and I think this still remains true, is that Bitcoin will become the most valuable when your money is the least safe from governments and government regulation. Anyways, T with the Arcane Bear, it's a short little update for you. I hope you guys are all having a great time. See you on the next episode.